Hi, this is Mike Andrick for BreakingCall.com. It's Friday, July 12 at the market close. I want to revisit the bank sector following earnings announcements earlier today from key industry participants JPM and Wells Fargo. Although the results were spun as very positive and beating expectations, the stocks did not react significantly, with Morgan closing slightly down on the day and Wells up only about 1.5%. Technically, these stocks in the sector have made a huge run from the 2009 lows, with many stocks back to or very near the 2007 highs. After a rally of this magnitude and an extended technical condition, natural resistance remains overhead, and these stocks could face a challenging environment for the next several weeks. Both Wells and Morgan essentially need to make new highs prior to any pullback that breaks the existing pattern of higher lows. Low-risk entries in these stocks can be considered, but only on pullbacks or a validated breakout to new highs. Caution should rule until one of those conditions is met. Let's look first at the weekly chart of the regional bank ETF, symbol RKH. Many individual stocks in the group have similar technical patterns. RKH hit time and price resistance recently and pulled back. It is attempting to continue the rally, and the stock is in the top half of the trend channel. However, this stock essentially needs to make new highs prior to any violation of about the $45 area to keep the uptrend clearly intact. The weekly chart of JP Morgan shows a break above the major 2007 highs after a long lateral consolidation below resistance. There has been, however, very little follow-through so far, and there is a risk that the stock could fall back into a trading range below resistance. The stock has made new highs, and the challenge for Morgan is to stay above about $49. If we switch quickly to the daily chart in Morgan, we can see clear trend channel support in the $48 to $49 area, and below that the 200-day moving average at 47. Now let's look at Wells. The weekly chart in Wells Fargo moved out of a multi-year trading range, but is now approaching the all-time high dating back to 2008 at 44.52. This is a major resistance level that could stop the advance or change the trend. To have a reasonable risk-reward trade-off, we need to get a pullback to support or new closing highs to get aggressive on the long side in Wells Fargo. The daily chart shows us resistance at the recent highs and then clear trend channel support down in the $38 area. So essentially, Wells needs to show us new highs, ideally above the 2008 high, prior to any violation of about $38 to $39 to maintain its trend. Thanks for watching, and visit us often at BreakingCall.com.